Greetings viewers and welcome to today's InfoShare video snippet where we will be discussing the option to take on balances within the fixed assets module. Now, it's very important to understand that there is a sequence that must be followed when using the take on balances process within your fixed assets module. So it's very possible that you maybe be using a different application to maintain your fixed assets register. And we're moving over on to Sage 200 fixed assets that you now want to bring on your existing figures as well as your asset information. So we'll just be covering the sequence that gets followed in order for you to bring on those take on balances or those historical depreciation figures and then continue depreciating the assets within Sage 200 evolution fixed assets. So the important thing we need to do first is set up our accounting periods. So that's done under fixed assets maintenance, accounting periods. And I'm just going to go add a particular year. Now, what's very important to understand is that your fixed assets periods must incorporate your oldest assets. So for example, if you have very old assets, you need to ensure that you've got accounting years for those assets. So for example, if your first asset was purchased, say in 2014, you need to ensure that you've got an accounting year or accounting period for 2014. So I'm going to start off with, for example, 2015. And remember is that your accounting periods need to correspond with your fixed assets accounting periods need to correspond with your general ledger accounting period. So for example, if your financial year runs from March to February, also ensure that your accounting periods run in the same sequence. So I'm going to say that my accounting periods run from Jan to December, and I'm going to say the oldest asset happens to be bought in 2015, and I can say okay then. Right, so 2015, add a new year. And very importantly is that you need to ensure that at the end of your financial year, that you do add a new year within your fixed assets accounting periods so that your depreciation can continue being calculated within your new financial year. So I've got up until 2017, add 2018, and then 2019, the current year. So as you can see in this case, I've started my financial or my accounting periods in 2015 January and right up to the current financial year. So as I say, very important to ensure that your oldest asset date range is incorporated into these periods. So I'm just going to set up, firstly, I'm just going to set up a depreciation method. And remember is that when you install your Sage 200 program, this program does create default depreciation methods and asset types for you. However, you can go and add additional ones if required. So I'm going to say it's going to be a straight line. I'm going to say it's 4-year or 25% depreciation, which happens to be straight line 4 years. Right, and then once you've done that, we then need to go and link the depreciation method to an asset type. And I'm just going to say, for example, now very importantly, I'm now going to specify my depreciation method. So under book depreciation, pick up my straight line 25, straight line 25 for tax depreciation, and I now have an asset type which is linked to my straight line depreciation, 25%, 4 years depreciation method. Now, the very important thing to understand is that under my maintenance defaults, I need to tell the system that I do have historical assets and that I'm going to begin using my system from a specific first processing period. So very importantly to understand this concept of the take-on. So in this particular example, we're going to say we know that our accounting year runs from January to December, and we would have purchased an asset in 2016, and in 2016 we were using a different program or a different method for our fixed asset register, and as at the 1st of January 2018 we're now going to be starting to use our Sage 200 Evolution fixed assets. So very importantly, I'm going to make my first processing period, then my existing periods, I'm going to make it January 2018. Okay. So very important to say is that the system now knows that the first time I'm going to be using the application is going to be in the period January 2018. Remember is that once I've specified these details and I return back, okay, it can still be changed. However, not and once I've processed any transactions, we obviously can't change it. So very important that you specify the right first processing period in order for your subsequent depreciation calculations to be correct and in accordance with your depreciation methods and asset types. Right. So once that's done, I'm going to now go create an asset. And link it to an asset type, which is going to be my equipment and machinery. And very importantly, I'm going to say, remember is that we're saying is that this is an historical asset which was purchased and is being used and depreciated prior to our first processing period. So therefore, I'm going to say it was bought in 2016 on the 1st of January. And the purchase price, let's just make it 52,000. And I'm then going to say the book depreciation. And remember is that I need to ensure that the depreciation start date is correct, because that will determine exactly at which point the asset begins depreciating. So I'm going to say it was start and depreciate in January 2016, and the same applies here. Right, so there's my asset details. It was purchased on that particular day, and I'm now going to say okay. So now what's happened is that the assets are in the system. Remember is that you are able to make use of options to import your asset information from a CSV file, either via the data import-export facility, or else using the data distribution services, which allows you to import assets with the relevant information if they are in a CSV format. So I'm now going to move on to my fixed assets take-on balances. And what you'll notice here is that the asset now appears. So let's just go one step back. And what I'm going to do is I'm going to add an asset. And I'm going to say this asset was, for example, purchased in 2018. However, it was purchased in December 2018. Right, so there's my details. Asset was purchased in December 2018 with all my relevant information. And If I now go to my take on balances, you'll see the asset doesn't display there, simply because the purchase date and the date depreciation to start fall or after our first processing period. So if you don't see assets under take on balances, it simply means is that they start depreciating after your first processing period. Right, so there's my asset which was purchased in 2016 and which is prior to my first processing period. Add balances. And what I can do here is I can specify depreciation for the current year as a take-on figure and depreciation for prior years, as well as tax take-on values prior years and current years. So what I'm going to say is that the depreciation value, for example, for prior years was 18,000. Okay. So this is my depreciation calculation from the 1st of January 2016 up until December 2017. So remember is that I just happen to be using prior figures. So this figure that you bring as a take on is the depreciation value on the day prior to the first processing period. So in this particular case, this is the depreciation value for the asset as at 31 December 2017. Very important that you specify the correct take-on value and the take-on period information is correct. So I'm simply saying, once again, the depreciation value from 1 Jan 2016 up until 31 December 2017 was 18,000. And the same thing applies for my tax take-on values. Yeah. In this particular instance, I happen to be using or starting to use a program at the first month of my new financial year. However, it's possible that you could bring on the figures during your financial year. So in that case, you could have prior year figures for your depreciation as well as a current year depreciation value. Right. So we've got that information there and we'll say, okay. Now, what we're trying to establish here is how does the application calculate depreciation going forward from the 1st of Jan 2018 based on our purchase price as well as the take-on values. So right, let's just go check what's happened here. And I'm just going to do a quick calculation. So what we're simply saying is, remember the asset cost 52,000. And we're saying that the take-on figure or the depreciation which was calculated up until December 2017 was 18,000. So if I subtract 18,000 from 52,000, you'll see that currently, as at the 1st of January 2018, the book value of the asset was 34,000, which is my purchase value less my prior take-on figures for my depreciation. So we can confirm that on 1 January 2018, the book value was 34,000. Right, that's the first hurdle we've covered. Now let's just check how the depreciation is going to be calculated from the 1st of January. Now remember is that we've said that on our asset types that we are linked to a depreciation method which is straight line 25%, 4 years, which means that the lifespan of those assets is 48 months. 12 times 4 is going to give you 48 months. All in agreement with that. And what we then need to establish is how many months have passed from the date depreciation start of the asset up until the current period. So we know that from 1 January 2016 to the 31st of December 2017 is 24 months. So therefore, we're going to say 48. So we've got 48 months minus 24 months 24. And all we're then going to be doing is to establish our depreciation. We've said 52,000 minus 18,000, which is our depreciation value, equals 34. You're going to divide that by 24 months, because 24 months is the remaining months of the asset's lifespan. And we're going to have a value of 1416.66 depreciation value per month. Let's just check that out. And what you'll see is that if you go to our reports, and let's just go through to our depreciation reports, book depreciation, and we're going to go run a depreciation report for this asset. In January 2018, which is the first month that we've been calculating depreciation on the asset. And let's just say preview that. And as you can see, we have depreciation value of 1416.67, which is exactly what the depreciation value will be based on the purchase price, take on balance, and the book value of the asset. So once again, let's just do a quick recap of the calculation. 52,000 purchase price. We then have a take on value of 18,000, which left us with 34,000 worth of, with a book value of 34,000. And the 34,000 is then looked at based on the number of remaining months of the asset's lifespan, which is 24. We then take the book value, divide that by 24, which then gives us our depreciation value per month. So for the remainder of the asset lifespan, the depreciation value is going to be 1416.67 per month. So I just want to go recap a couple of important areas. And that's firstly is that our accounting periods always ensure that your accounting periods take into consideration your oldest asset, and also that the accounting period set up here within fixed assets does correspond to the accounting period set up within your GL and your financial setups. Very importantly, if I then go back to my defaults in fixed assets, we need to specify the correct first processing period. So as you can see, now that we've had a take-on figure or take-on balances for assets, the first processing period cannot be changed. Remember, the first processing period is the first month that you're going to be using the depreciation calculations within Sage 200 fixed assets. So always ensure that you've got those particular month correct. Moving on to our assets. If you open up an asset, the very important area here is under your book depreciation and tax depreciation, that the start date for depreciation and tax depreciation is correct. This is important as it means that from this particular period, depreciation is going to be calculated on that asset. And on our take-on balances, remember, only assets that were purchased or begin depreciating prior to the first processing period will be available. And with our take-on balances, you are able to specify current year depreciation if you begin working within Sage 200 fixed assets within your financial year. And if it's at the end or the beginning of the financial year, you can insert those figures as being depreciation prior years. So always important to have those details correct. And remember is that prior years is the day prior to your first processing period. So it's important that the information is correct in order for your subsequent depreciation calculations to be correctly calculated. And once you've done that, simply run your depreciation reports for those assets and then always specify a depreciation report date so the system knows exactly how to calculate depreciation value based on your take-on figures and, more importantly, or very importantly, the depreciation start date. So if I just run my report now for the second month, and I preview that, as you can see, monthly depreciation remains at 1416.67, which is the monthly depreciation. And the current year is now for the 2 months from January 2018 to the end of Feb 2018. So therefore, it's for a 2-month period. And obviously, we then have relevant information, purchase price, prior years, etc., as well as the book value and that information in the book value of the asset. So as you can see, a couple of settings that must be set up correctly in order for you to have correct depreciation values, especially if you're making use of take-on information. Thank you so much for watching. It's a wrap from me. Over and out, and goodbye.